Hi everybody, welcome to a session on financial management. In this video, we are going to discuss about leverage analysis. So let us see what is leverage analysis and different aspects and types related to leverage analysis. One of the basic financial decision is financing decision. As you all know, it is a major decision taken in any business organization. If any mistake is occurring while taking a decision relating to finance, it will affect the entire life of the business. So one of the basic financial decision is the financing decision. Financing decision is concerned with deciding how much funds to raise and how to raise such funds. The basic problem in financing decision is determining the optimum mix of debt and equity. This requires two types of analysis. One is leverage analysis and the second is EBIT and EPS analysis. EBIT refers to earnings before interest and tax, and EPS refers to earnings per share. So let us see what is leverage analysis. Whenever there is a change in debt equity mix, there is an impact on the shareholders' return and risk. The effect on the shareholders' risk and return as a result of change in the debt equity mix is known as leverage. In simple words, we can say that the effect on the shareholders' risk and return as a result of a change in the debt equity mix, we call it as leverage. Let us see what is the meaning of leverage. The term leverage comes from physics. Leverage means to raise. Leverage is the action of a lever and mechanical advantage gained, that is, lift a tool with less power. In financial management, the term leverage is used in specific sense. It means that by use of fixed cost, the firm increases or levers its profitability. It is the relative change in profits due to change in sales. It is also known as gearing. So leverage in simple meaning we can say that to raise or to increase the profitability of any business organization. It is done by the usage of fixed cost. It is a relative change in the profit that is happening due to change in the sales. Another name for leverage is gearing. So let us see the different types of leverage. Leverage is classified into three. One is operating leverage, second is financial leverage, and third is combined leverage. Let us see in detail what is operating leverage in this video. Operating leverage is defined as the use of fixed cost in cost structure. It measures to the extent to which fixed cost is used in operating the firm. The formula used for calculating operating leverage is contribution divided by operating profits or contribution divided by EBIT. Contribution is calculated using the formula sales minus variable cost. EBIT is known as earnings before interest and tax. And EBIT is calculated using the formula contribution minus fixed cost. If contribution exceeds the fixed cost, the operating leverage is favorable. And if the fixed cost is more than the contribution of operating leverage, then we call it as unfavorable. So operating leverage means it is the use of fixed cost in cost structure, and it measures the extent to which fixed cost is used in operating the firm and is calculated using the formula contribution by operating profits or contribution by EBIT. Contribution is calculated using sales minus variable cost. And earnings before interest and tax is calculated using the formula contribution minus fixed cost. In this case, if the contribution exceeds the fixed cost, then we can say that the operating leverage is favorable. And if the fixed cost is more than the operating contribution, then we call this type of operating leverage as unfavorable operating leverage. So let us see the degree of operating leverage. The degree of operating leverage may be defined as percentage change in operating profit resulting from a percentage change in sales. And degree of operating leverage is calculated by using the formula percentage change in profits divided by percentage change in sales, or percentage change in EBIT divided by percentage change in sales. And if only one level of EBIT is given in the question, then it is calculated using the formula contribution by EBIT. So degree of operating leverage means it is the percentage change in profit or EBIT resulted by a percentage change in sales, and it is calculated using the formula percentage change in EBIT divided by percentage change in sales or contribution by EBIT. So let us see some of the characteristics of operating leverage. Some of the characteristics of operating leverage is it is related to the asset side of balance sheet, and the operating leverage is directly related to break-even point, and it is related to the selling price and variable cost, and also involves business risk. These are some of the common characteristics of operating leverage. One is it is related to the asset side of balance sheet and is directly related to the break-even point and related to the selling price and variable cost, and it also involves some business risk. So in this video we were discussing about different types of leverages and the leverage. Leverage means it is the use of fixed cost and the firm increases or decreases or increases or levers its profitability, and it is also known as gearing. Leverage is classified into three: operating leverage, financial leverage, and combined leverage. Operating leverage is the use of fixed cost in cost structure. It is calculated using the formula contribution divided by operating profits or EBIT. And degree of operating leverage is the percentage change in operating profit or EBIT resulting from a percentage change in sales, and is calculated using the formula percentage change in EBIT or profit divided by percentage change in sales. And we have discussed about the characteristics of operating leverage. It is related to the asset side of balance sheet. It is related to break-even point. It is related to selling price and variable cost, and also involves some business risk. This is all about this video. Thank you all for listening to me.